everybody. It is Friday, the 6th of October, 2017, and the market finished with good gains once again. For the week, the S&P, the Nasdaq, the Russell, semiconductors all gained more than a percentage point, and those biotechs are breaking out once again, up 2%, adding to their 28% gain for the year. Oil was the weak area. Let's take a look at some charts and make some sense of it all. So looking at the S&P 500 here on a 15-minute time frame, each one of these candles representing 15 minutes. For the week, you can see we began here with a gap higher, and we were higher every single day except for today. We saw a little bit of profit taking, but we're still firmly in an uptrend, and it's easy to look at a market and say, it's up too much or it's traveled too far too fast. But the fact is, the buyers remain in control. We're above a rising 5-day moving average. Therefore, they will continue, the buyers that is, will continue to get the benefit of the doubt. Early next week, we'll be looking for about 253-ish to act as our first level of support. If we pull back into that area, that's just a normal pullback within a primary uptrend and a super strong bull market that's getting, maybe a little bit ahead of itself, you could say. But the fact is, it can continue to get ahead of itself. It doesn't have to pull back. Wait for evidence from the market before you decide to sell short or before you decide to even take profits. Just selling short shouldn't even come to mind unless you're a very short-term day trader. The NASDAQ broke out this week as well and added to those gains from the breakout on Thursday. So we've got this market once again at all-time highs. It had been lagging a little bit, but as I've been pointing out, we've had this resistance here, more repeated tests of it, and higher lows coming into it. So now we'll be looking at 145.5 to 146 as our first more important level of potential support. The Russell 2000 sure has had a heck of a run here. As we were at this point that I have boxed in, I pointed out that it had the potential to do what it did on the last few breakouts. But because at this point it didn't show any signs of slowing down, and that's this box right here, and it was still above that rising 5-day moving average, it made 0 sense to sell short. And that's still the case, that it doesn't make any sense to sell short this market, not until it breaks down and starts making lower highs and lower lows. And even for that, you're talking about one of the strongest bull markets we've seen in quite a while, and to try to fight that really doesn't make a whole lot of sense. So the buyers are still in control. They should remain in control. We've got the potential for maybe a pullback down towards 147.5 next week, but I wouldn't expect it to drop much further than that if we do in fact break down. The semiconductors are continuing to lead the way here and show people how foolish it is to sell short for more than a couple days when we have a rising 50-day moving average. So semiconductors remain in a powerful uptrend. Our first potential level of support on a pullback would come down at about 93 to 93 and a quarter. And then the biotechs, did in fact break out this past week, and they've been giving us reasons to believe they would as they finally broke back above that volume weighted average price from this most recent peak. We're looking at 65-minute candles right now. And once it got above that 334, as I've been mentioning, that's where the buyers, in fact, gained back that control. And that's why we're seeing this group at new all-time highs once again. Not all-time highs, rather, but new highs for this move. Looking at the weekly time frame, this market still has room to run. The next potential level of resistance, maybe in this area up to $350 a share. But as I pointed out earlier in the week, that the measured move would indicate that this market has the potential actually to get up towards 360. And that is based on the height of this from point A to point B. Add the distance of that to point C. That gives us up price objective up near about 361. Everyone's got a lot of great winners in this market right now. The key will always be how you manage risk. I pointed out in last week's event at Trade Ideas a couple of structural short squeeze ideas, including FireEye, and that was above $17.20 a share. This stock has a big short position in it still, and on the weekly time frame, the buyers are regaining control. I think it's probably making a quick move up towards that 1950 level, which is the volume weighted average price off of the 2015 high. The other name that I had mentioned as a short squeeze idea was Cars. This is a company that came public earlier this year, And as it gained back control, back above the volume weighted average price from the IPO, what we can see is there was a big short position in here, and these shorts have been squeezed, are starting to get squeezed. 25 million shares short. You can't imagine there's many of them in a winning position. So this stock should be able to continue to move higher. As always, trade with a trend, manage risk first, and I will talk to you again next week. Thanks for tuning in.